Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about my dividend income for the month of May. Now this is a monthly series on the channel, and honestly it's my favorite of the videos that I post every single month, and that's really the reason I started this channel in the first place. I love posting these portfolio updates and these dividend updates for you guys to see. Now, if you do appreciate the transparency and enjoy these types of videos, consider subscribing to the channel. I would really appreciate it. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, with that being said, let's start by taking a look at my portfolio dashboard. So in total, you can see that I've invested $51,145 into the portfolio and my current value sits at $64,168. Now for some of you that might not seem like a lot, but to me that's absolutely incredible. If we take a look at my channel, we can see that just a year ago we were sitting far lower than this. Now from my original upload on the channel, which was October of 2023, so a little bit over a year and a half ago, my portfolio value was only at $27,255, and that's when I started publicly tracking the portfolio's performance and value. Now since then, you can see how it's been steadily increasing every single month. You can also see, of course, how my thumbnail style has changed, and of course my video quality has hopefully improved over time. If any of you guys watching this video are here from 2023, shout out to you, leave a comment down below, I would love to know. Now hopping back over to my portfolio dashboard, you can see that my unrealized gain is at $13,000 or about a 25.46% total return for my portfolio. And my current dividend earned so far, this is my tally for how much dividends I've earned in the portfolio since its inception, is $1,689. Now every bit of that money has gone back and been reinvested back into the companies that paid it out in order to accelerate that compound effect. Now we recently broke the $1,000 mark for yearly projected income going forward, so each year going forward I'm expected to be getting paid at least $1,000 out of my portfolio, which I'll be reinvesting back into those holdings. Now these dividend payments are relatively low, and as you can see right here, my portfolio yield is at 1.63% with a yield on cost of 2.05, which is pretty low, but that is how I prefer it. My main focus in the portfolio is total return, and I just think that dividend paying stocks are a great way to have some good performance long term. Now taking a look down here, I do like updating this table because it does show how much I've invested and how much dividends I received each year since starting this portfolio. Now even before I started the YouTube channel and I started publicly tracking the portfolio, I was still tracking the portfolio myself, and so you can see right here in 2020 I invested $2,800 and in total I received $12.45 worth of dividend income. Now fast forward to 2025 and you can see that I've already invested over $16,000 into the portfolio and we're only about 6 months into the year, and in terms of dividends I've already received $270 with dividend income. Now this graph right here does a great job helping visualize those yearly dividends, and you can see right here that 2025 is still significantly lower than 2024, but by the end of the year I expect to surpass 2024 fairly easily. Now in terms of my monthly dividend income, which we will touch on later in the video, you can see right here that it is more sporadic, and that's because a large weighting of my portfolio is in ETFs which pay quarterly. Now in terms of which holdings in particular pay out the most in dividends in my portfolio, VOO will be number one, and that's because it's by far my largest position in the portfolio, and then we have schd following that because it has a high dividend yield and it's a fairly large position as well. In terms of individual stocks that are paying a substantial dividend, we have Altria Group here, ticker symbol MO, and they have very high dividend yield. We have Texas Instruments and Target, just to name a few. Now with those metrics in mind, which we just covered in the portfolio dashboard, we can hop into my future value calculator, and I like to show this one off in these monthly recap videos to see where we can project our income and also our portfolio value over time. If any of you are interested in trying out this future value calculator for yourself, check out the pinned comment or the description for a link to my Patreon. It's completely free right now and you can grab this future value calculator for yourself. So my starting principal is my current portfolio value at $64,168, and my annual contribution is how much I'm expecting to put in each year going forward. Now this year I'm already at $16,000, but for future years I'm not expecting putting as much money into the account as that. In terms of my annual dividend yield, it's at 1.63%, and my expected dividend increase and expected price appreciation can be changed to whatever values I see fit. So in this case, my dividend increases lately have been a little bit on the low end. I think we can go 5, maybe 6% if we want to be a little bit more aggressive here. And for expected price appreciation, I think we might have some slower performance in the future. Now taking these more conservative values into account, we can see right here that my portfolio value at year 30 will be $2.3 million, but if I had 40 years to allow it to compound, which most of us do not, you can see how much more substantial that final value would be. The main point of this calculator, at least for myself, is just as a general guide as I'm saving for both retirement and other future goals. And so you can see right here that I would need a very substantial amount of time to be able to save up a substantial amount of money. Keep in mind that over time, inflation will continue to increase, so the amount you'll need for retirement will be higher and higher. Now you can play around with these values for yourself. If I had a very optimistic look on this and we thought we'd perform with 12% price appreciation per year every single year for the next 40 years, which is not realistic of course, then you can see how much more substantial that final value would be. In that case, at even 20 years, you'd be at 1.5 million, and in 30 years, you'd be at $5 million of portfolio value. So if you haven't yet grabbed a copy for yourself, check out my Patreon, try it out, and let me know what you think about it. With all that being said, let's take a look at my money market dividends, my actual stock dividends, and some of my purchases for the month of May. So starting off with the money market dividends, we'll get this out of the way real quick. This is just money that's sitting in my account that I don't include in my total portfolio value. It's the sum of money that you might have seen on my portfolio dashboard labeled cash position. As you can see right here, starting in February, it's not only VMFXX that's paying out, but also SPAXX. That's because I opened a Fidelity account for some of my holdings so I can try it out and see what I think. Now prior to that, I was using Vanguard exclusively, but right now I'm trying out Fidelity, and if I like it enough, I might move my entire portfolio over to Fidelity. So for the month of May, I received $9.96 from the money sitting in my Vanguard account, and I received $12.73 from the money sitting in my Fidelity account. Now, I don't count this in my calculations for how much dividends I've received so far, but I do keep track of it, and in total, my money market dividends are about $816 so far. Now for my real dividends in May, we can see that there was 4 different names that paid me out. We had Lowe's on the 7th of May, MasterCard on the 9th, Texas Instruments on the 13th, and Apple on the 15th. Now in order, we can see that most of these are pretty small. Lowe's at $2.38, MasterCard at 77 cents, Texas Instruments actually is pretty substantial at $22.61, and that's because it's a very large position of mine, and Apple at $2.37. Now Apple and MasterCard have very low dividend yields. Lowe's has a fairly nice dividend yield, but it's a very small position of mine, and Texas Instruments has a nice dividend yield plus a large position, which is why it ends up paying out so much every quarter. Now, MasterCard is a pretty bad culprit in my portfolio because of the way Vanguard works. Maybe every brokerage works this way. The smallest amount that they'll let you reinvest into is 0.001 shares. Now, at 77 cents for the total order, the company still takes all that to buy these 0.01 shares of MasterCard. And because of that, the price I'm paying for MasterCard is effectively $770. Now, what I've considered doing is potentially not reinvesting MasterCard automatically, but I haven't decided yet because I'm not sure if it would break my way of tracking all these dividends and my spreadsheet as an effect. Now, real quick for buys, what I want to point out here is I've been consistently doing my weekly buys that I did cover in my 2025 investment plan, and I'll pin it right up here if you guys haven't checked out that video yet. It's a pretty good watch. But basically, I'm putting $100 into VOO every single week no matter what, and I've been buying 1 share of SCHD every single week as well. So you can see right here that I bought it on the 7th, then I bought it again on the 14th, and then I bought it on the 21st and the 28th. So I managed to hit every single week in May. Now the reason this is slightly out of order is because the United Health shares I've been buying up right here are actually my Fidelity account now, and so I just put them all in at the same time while I was going through my Fidelity transactions. So the only individual stock I bought in the month of May was United Health, and if you guys want to see a detailed breakdown of why I was buying this company, what my thesis is for it, I'll pin that video right up here as well. Now I was able to bring my cost basis down a decent amount, but it's still substantially higher than the current stock price, which is pretty unfortunate. Hopping into my portfolio holdings section real quick, I just have it organized here from the best performance all the way down to the worst performance of my portfolio, and you can see right here that MasterCard is my best performing stock out of the 4 that paid out a dividend this month. Now this is just a pretty brief overview, but you can see right here the performance has been overall strong for my portfolio. Lowe's has been the lagger out of the bunch. Texas Instruments was down a decent amount a couple weeks ago and I actually bought some more shares for the first time in, I want to say, over a year, but now it's back up again all the way up to I think $180 or $190 per share, so it's been climbing pretty quickly. Now in terms of allocation, MasterCard is very small, less than 1% of my portfolio, Apple's at 2.9%, Texas Instruments at 5.0%, and Lowe's at 0.7%. Now I'm not sure yet what I want to do with my Lowe's position. I might decide to sell it at some point, but I wish I could have bought more MasterCard. The reason it's such a small percentage of my portfolio is because the price climbed too quick. I didn't pounce on it when I had the chance, and now I think it's significantly overvalued, so I want to stay away from buying more shares. Now, if MasterCard's stock price dips significantly, I will definitely be taking that opportunity and buying up a bunch of shares. Now, the same can be said for Apple. Honestly, Apple's performance lately has been a little bit worrisome. The company has not been innovating for quite some time, but I still have faith in them long term. Apple does know how to innovate and stay relevant. When I first bought this position a couple years ago, I bought it on a pretty significant dip, and at the time it was I think about 6% of my portfolio value. Now since then, of course, my portfolio has grown a lot and the amount of buying opportunities for Apple has been very slim. Now since I haven't bought any more Apple shares since the initial wave of purchases, the allocation has dropped down to about 3% of my portfolio, which is not what I was initially intending. However, at these stock prices and this valuation, I'm definitely not going to be buying any more shares of Apple. It would have to dip down pretty significantly, same for MasterCard. And now for my dividend calendar, and this is honestly a pretty awesome sheet within my spreadsheet if I do say so myself, but you can see right here which companies paid out how much every single month. For me, this is a great way of keeping track of it, and I like to be able to visualize how they're paying it out and how the dividend is increasing over time. So Apple paid out $237. You can see that in February it paid out $227. I believe that's because of a dividend increase and also because of the dividends being reinvested back into the company. We have Lowe's at $238, which is a small increase. That's just from the dividend being reinvested back, and MasterCard at $77 because the dividend being reinvested back is not significant enough to raise it. Now the most substantial jump here is for Texas Instruments at $22.61, and that's because it both had a dividend increase and of course I've been reinvesting these dividends back into the company. Now over time, these dividends will continue to compound and grow, and I'll continue to show you guys on the videos every single month how they've been growing. In total for the year so far, Texas Instruments has paid me out $42.35, and for the month of May, I got paid out $28.13 in total, putting my total for the year at $270.61. Now for my monthly breakdown section, this tracks my amount invested in my dividends received every single month since starting this portfolio, and so for 2025, we can see that in May, I actually invested a pretty substantial amount, mostly into United Health Group, but my dividend was actually fairly small at $28.13. Now, unfortunately, most of my months are fairly small until we hit the months where schd or VOO pay out, and those tend to be substantially bigger. Now, highlighted in green is some conditional formatting, which tells me automatically what's my record month across my entire portfolio history, and that's at 163.62, and that's from VOO and schd paying along with some other companies that same month. Now, the next time I might have a chance at breaking this record would probably be December. December tends to be a pretty big month for me. Regardless, we still can visualize how it's been growing over time, and the more information that's input into this graph, the clearer this image will become. Overall, it's pretty sporadic on those random quarters, like I said, where the ETFs pay out, but it's still been steadily increasing even for the other quarters. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking this detailed look into my portfolio and seeing some of the changes I made to the portfolio, including some of my buys and dividend income. Now, if you did make it this far into the video, let me know down below how much dividend income you received this month and which of your companies paid you out. If you haven't yet watched last week's video where I did a stock spotlight on Booz Allen Hamilton, check out this video right here. And if you want to see my deep dive into United Health and why I'm buying more shares of the company, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.